Good morning, students. Yet another video on cash flow statement. This is also on calculation of net profit before tax. In this sum, we will be saying that before we do the sum, let's recap what things we need to do in cash flow statement and what is the steps in finding out the operating profit first, because we have three activities: operating, financing, and investing. So we are doing with operating activities. Operating activities, step one, we have to find out net profit before tax. And this is shown outside the cash flow statement. And this only we will be learning today even. Next is adjustment of non-cash and non-operating expenses. We get operating profit. Then we have to adjust working capital changes. We get operating profit before tax. And then we have the tax part. And we get operating cash flow from operating activities. Then we have investing activities and financing activities. We will add this all three. And we get cash inflow or outflow from different activities. So we have to now calculate net profit before tax. For net profit before tax, we need to see surplus, adjustments, or short-term provisions as given in the sum. If balance sheet is given, we will see reserves and surplus. We will see short-term provision, that is provisions, short-term provisions, that part provision for tax we will be getting, and adjustments, if any, we will see. Now, this is the formula as we have already done in the first video. Net profit, difference is closing minus opening. Add proposed dividend of the previous year. Now, why previous year? That we are coming to it. Provision for taxation, current year. Interim dividend, if paid, transfer to other reserves, except security premium reserve, which is a part of capital, financing activity. And less refund of tax if credited to PL. If credited to PL, they only refund. Profit before tax we will be getting. And why we have to find out this NPBT in the sum. And we have been given in the sum most of the times this NAT, net profit after tax. You see, net profit after tax, we already have subtracted from NPBT this proposed dividend of the previous year, and provision for tax of the current year, provision for tax of current year, and any reserves which we have transferred, interim dividend which we have paid, and then we got NAT. In order to get NPBT, we do the opposite thing. Whatever is already subtracted from NPBT, we will be adding it. So interim dividend, transfer to reserve, provision for tax of the current year, and proposed dividend of the previous year, we add. And whatever is already subtracted, that we have to add, and whatever is already added, that we have to subtract. So we subtract refund from tax and we get NPBT as shown over here in the sum. Okay. Now, why do we add proposed dividend for the current year? See, proposed dividend is a dividend proposed by the board of directors of the company. Okay, and then it needs to be approved by the shareholders in the shareholders meeting. And it is the time taken, means this year's proposed dividend is to be approved at the end of this year. So it will be, the effect will be in the next year. That means previous year proposed dividend is approved this year. So in the effect is this year only. The effect is this year only. That means previous year's thing will be shown this year. So the effect will be shown this year only. So when I say that the effect is shown this year only, so it means what? The previous year's proposed dividend will be taken in NPBT's calculation. Previous year. And that previous year only will be considered as a financial activity and will be subtracted from financing activity. When we will be doing that, you will understand. Interim dividend is the dividend which is paid during the year, and that also has the same treatment as proposed dividend of the previous year. We add back in NPBT and we write in the financing activity as subtraction. Then we have also the provision for tax of the current year, which is being current year, that only we are writing in the statement of PL, and that only we are paying. So that only we have to write. We have to calculate, in order to calculate NPBT, we have to add back the current year's provision for tax. Whatever we have transferred to reserves, we add back because it has reduced my profit, reduced my surplus profit, reduced my, it's appropriation. So in order to find out after appropriation the net profit only, that is profit before tax, you have to add back this reserves in it. Any refund if we have done, that also needs to be subtracted. So that already told. Now see this sum. From the following information relating to the year ended 31st March 2019 and calculate net profit before tax. 31st March 19 and 18, both informations are given. So we have to go through the information and we will be able to find out how much is the NPBT, which is done outside the cash flow statement. So see this sum 18 and 19's balance sheet is given, liability side and asset side is given. We only need to find out in this sum the net profit before tax. See where we will look at this. We don't have to see the entire sum for this net profit before tax. Only the item which is affecting net profit before tax, and that is reserves and surplus. So we have to see reserves and surplus, and as already told, we have to also see the other current liabilities. There is a note. We may also have to see the short-term provisions. So these three items only need to be seen, nothing else as such. Short-term provisions means provision for tax, 31st March 2019 and 31st March 2018. You know that the current year's provision we have to add. So first of all, we will take the net profit, and from where we will get in the note 1. So where is the note given? In the sum only the note is given. This is note 1. Reserves and surplus. General reserve, WCR means workman compensation reserve. Security premium reserve is also there. Surplus, that is balance in statement of PL. These all things are given. And other current liabilities, the note 2, unpaid dividend is given. If it would have been any other type of other current liability like outstanding salary or something like that, then we would not have taken this other current liability in calculation of NPBT. But it is unpaid dividend, something of dividend, so we have to take into consideration this other current liability and that short-term provision. So three items only we need to see: short-term provision, reserves and surplus, and other current liability. So to begin with, we start with reserves and surplus. But see the adjustment, two adjustments are there. One is regarding dividend and one is regarding tax. Though there is one more adjustment, and that is regarding issue of shares, that is not required. Security premium reserve not required in calculation of NPBT. They will go in financing activity. So we have only two adjustments. One is dividend and one is regarding tax. So as I have already told you, when dividend informations are given and something more information is given in tax, then we should open this provision for tax and dividend account in order to understand the sum in a more better way. See this provision for tax. The opening balance and closing balances were given in provision for tax. The opening balance of provision for tax, which is 2018's balance, is given over here, students, is 2,05,000, and provision for tax is a liability. So we have by balance brought down the credit side. We have 2,05,000. This is credit side, remember? So I should mention that even. This is the credit side. So we have to write in the credit column. Okay, students. So that is the credit side, and this side is the debit side, the other side. So we have to write in the debit side the closing balance, that is two balance carried down, the closing balance 1,05,000 given in the sum. These two were given in the sum. If you notice that it is given in the sum in the balance sheet only, short-term provisions, that 1,05,000 and 2,05,000 of the previous year and 1,05,000 current year. Current year is the closing balance, so closing in the debit side and the opening balance in the credit side being liability. This is the this one, debit side. Okay. So these are the two sides. Now, before I proceed, I will be saying dividend payable account is also there. So dividend payable account, the balances are given in the sum. The dividend payable account balances, see in the adjustment, dividend proposed for the year or payable during the year 18 and 19. That is 18 is the opening balance and 19 is the closing balance. 18 is the opening, that is 75,000, and 65 is the closing. Payable, this is also a liability, so it will also close like this only. Liability side by statement, by balance carried down, by balance brought down will be the liability side, dear students. By balance brought down, and to balance carried down. This will be to balance carried down. Dividend payable. So let's see what was the dividend payable, whether I have taken the correct figures or not. Oh, this. Okay. So unpaid dividend is 10,000 and 12,000. Now over here, dividend proposed for the year. These are the proposed figures. So what to do with the proposed figures now? So dividend proposed in the current year, which is 65,000, should be ignored because still the shareholders' view is still pending over there. They may refuse to pay dividend. They may refuse to get the dividend. So what is the previous year? That is to be shown in the profit and loss, 75,000. So that I am writing in this balance. Okay, this 75,000. We get how much is dividend payable, means paid, 73,000. Clear students? We can also find out by this way. Proposed dividend of the previous year, add unpaid dividend 2018's, less dividend payable 2019's. That means we need to pay this time 73,000. We need to pay the 73,000 will be shown in the financing activity. But what is transferred to statement of PL, that will be only coming to calculate the value of NPBT, net profit before tax. Let's see now the calculation of net profit before tax. See, net profit before tax, proposed dividend of 2019 only we have taken. 2018 only we have taken. That is this year's proposed, that is been shown in the statement of PL. We have to add back this one. Surplus. Surplus, how we have got? Closing balance minus opening balance. You see our closing balance of surplus in statement of PL. Closing balance 1,10,000, opening balance 1,60,000. That means 50,000 actual profit. The statement profit over here, surplus 50,000. General reserve, there is a negative happening. So whatever is happening, opening minus closing we are taking. So if we take opening minus closing over here, 2,10,000 minus 1,75,000, that is 35,000 is coming minus. Okay, opening minus closing minus opening, students, closing minus opening, so minus 35,000. So minus 35,000 we have done. In the bracket means minus. Add but written in the minus sign. Then provision for tax made 80,000. Provision for tax made 80,000. Transfer to workman compensation reserve 1,50,000. Provision for tax made during the year. You see the current year's provision for tax. See over here the opening, the statement of PL. This only, just whatever is given the statement of PL by which we have already done the working note. From there we got 80,000. That amount needs to be written. If nothing is mentioned, then my opening balance only we have paid this year and the closing balance will be recorded this side. Just think there is no other information. Then buy balance got down 2,05,000. Two balance carried down 1,05,000. Whatever is the opening balance, that only we assume has been paid this year. That means we would have paid 2,05,000. Then the statement of PL is whatever is the current year's balance left, that is transferred to statement of PL. If nothing information is given, that's why the current year's balance only we take as addition to NPBT. The transfer to compensation reserve is 1,50,000. This year's transfer to compensation reserve, if you will notice that 1 lakh it was, now it became 2,50,000. So we have transferred this year 1,50,000. That only we have added over here. Now you notice that we have not taken security premium reserve because that's an item of financing activity. We have issued the capital, we have issued equity shares of 1 lakh of rupees 10 each at a premium of 10%. So 1 lakh, 10 lakhs, 1 lakh. 1 lakh rupees is the premium which will go in financing activity and it will not disturb my NPBT calculation. So we have not taken SPR. Okay, students. So that much. So we got after adding 3,20,000 as net profit before tax. So we have got net profit before tax. So this is our calculation and we have got it. Now the homework is there, students. Similar type of sum, little bit change of numbers are there. And these are the informations, other informations. And please do the sum and share with me. Thank you, students.